Welcome to In the Field. I'm Brad Haire with the University of Georgia College of Agricultural and Environmental Sciences. I'm here today with Dr. Don Shurley, cotton economist with the University of Georgia Cooperative Extension. Hey, Dr. Shurley.
Brad, how are you this morning?
I'm good. Thank you for being with me today. We're going to talk today about cotton acreage in Georgia and the country. We're going to talk about this high ride that's been the U.S. cotton market since, I don't know, late last year, right, Don?
$2 cotton at one time.
That's
last
right.
winter and spring.
Exactly. So it's been quite a ride so far. So Don, what are we looking at right now is with the market? High, low, medium?
We're a little over $1, trying to stay above water at a dollar. We've lost about 40 cents a pound. That's the real concern over the past 6 weeks. It's about the 1st of July.
Let's talk a minute about supply. What are we looking at with cotton acreage in Georgia and in the country right now?
Well, we're going to be up 20-25% from last year. Georgia will be at 1.45 million acres. Frankly, I thought we'd be a little bit better than that. But the drought really probably kept us from planting some acreage, and there were some acres that we probably didn't get around to replant, or that we planted to something else after the drought. So our acreage will be up here in the state as well as nationwide. Production's going to be up as well. That's part of the issues, but USDA had the crop pegged at 17 million bales at one time, and then they adjusted it last month in their numbers. They adjusted it down to 16 million, and I think a lot of folks, myself included, are thinking the crop's going to be closer to 15. So the crop continues to shrink, and really the big question is, Brad, not so much about how much we planted, but what we're going to actually end up being able to harvest. The Texas crop is in horrible shape. They may walk away from half that acreage out there.
Now, we've had some recent downtick in our economy. Now, we've been on the downslope for quite some time. Talk about that a little bit, and also tell me a little bit about demand for cotton right now, and that tends to make the prices go up and down. So tell me a little bit about that.
Well, you would think with the U.S. crop getting smaller and smaller, you would think that would help bring prices back up. Like I said, we're struggling to maintain above $1, but the demand side has really gotten weak. If you look back at the 2010 crop, the marketing year that just ended July 31st, that crop, the demand was down 3%, 4 million bales worldwide compared to the 2009 crop. So demand was weak last year, and this year USDA was projecting that the demand will bounce back some, and it will, but it's going to be a lot slower than we initially thought. We're not seeing the purchases. Cotton's not moving as well as we thought it would, so the demand is going to grow a little bit this year for the 2011 crop, but more slowly.
Don, you've been in the cotton business for a while. We won't tell the viewers how long you've been in the business. But how fun has it been, or how challenging has it been to watch this cotton market for the past 6, 7, 8, 10 months?
Actually, the past couple of years have been great. When you go out and do winter meetings, the farmers like to see you. Cotton's $2 or $1, whatever, rather than 50 cents. The price of cotton, even though we're struggling to maintain above $1, is still good by any historical measure. But it's the volatility, Brad, that's really the problem. You watch the markets, it'll be up 5 cents a pound one day, it'll be down 5 cents a pound the next day. You've got all kinds of factors globally that are impacting the market. We just saw the Wall Street meltdown last week, and it's still happening. What impact is that going to have? We don't know yet, particularly long term. But there are a lot of factors, as always, that are beyond the farmer's control that make it so difficult to know when to price your crop, when to make those decisions, when to pull the trigger. And the best you can do is to try to keep an eye on the markets as best you can, day to day, week to week. Market your crop as you have a chance, as you go along during the year when you can make some money, and try to manage some of that volatility. But the prices are still good, relatively speaking, although we'd much prefer to see $2 rather than $1. But the volatility, the uncertainty and the risk in it is really a challenge.
Well, there you go. Cotton acreage up, demand kind of slacking. Market volatility, market meltdown, well, that's relative speaking. We're still talking $1 cotton. It's not $2 cotton, but it's still some good cotton prices out there. And Don, thank you for joining me today.
Thank you, Brad, as always.
And until next time, take care, give thanks, and good luck.